Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of August 7th through August 11th, where we'll talk about how to make money trading in August. We'll review how the markets performed last week, do our market analysis, and we'll talk about some strategies, some trade ideas about how to make money trading in August. We'll look at how the stock markets typically perform in August, and again, talk about some strategies and trade ideas about how to make money trading in August and how to make money trading the rest of this summer. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for this week, August 7th through August 11th. We keep our notes in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. We store all of our notes, documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks, and you can find a direct link to that publicly accessible Google Drive folder also in the description box below. Welcome. Good morning again, Walter Lyons. Thank you for joining us. Glad to see you. Hope you had a good trading week. So first we'll look at how the markets ended up on Friday. We'll look at the main screen in FinViz. Again, you all can tell me if you like the dark mode or the light mode in FinViz better. I guess the feedback so far has been dark mode, so we'll try that. So we can see the markets were trending up after the jobs data, and we'll look at the jobs data in a few minutes, and then, rolled over in the afternoon and all ended up slightly negative. So again, kind of a dichotomous market on Friday. Again, we ended up with more decliners than advancers, about 50-50. Again, about 50-50 new highs and new lows. We still got about 60-40 above their 50-week moving average or 50-day moving average, and still a little over 50% above their 200-day moving average. And as everything rolled over towards the end of the day, we ended up a little bearish. Early in the day, most of the mega cap techs, with the exception of Apple, were positive. Same way with the semiconductors, kind of rolled over. We'll look at SOXS, SOXL tomorrow as well. So everything, most things ended up in the red. Amazon had a good day after earnings. Apple had a poor day after their earnings due to primarily their guidance going forward. Welcome to Ricky Khan. Thank you for joining us. Look at some quick news. Berkshire, record operating profit. August Doldrums. So again, we'll talk about the summer Doldrums. We'll talk about the month of August. Weekly loss, warning sign. Tumble for the fourth straight day, worst week since March. So again, once we entered August, we'll see, the markets kind of rolled over. Oil, you see, made a surge up over 83. We'll talk about some of the news in oil, and then it declined back to 82. So we'll see oil's got good support at 80, bouncing up now between about 80 and 83 or so. Natural gas, pretty range bound, still between 250 and 3. Gold had been declining. Looks like it got some support around 1975. 1950 is still a good support level. And then we see it bounce back up. And there was some volatility in the dollar. The dollar strengthened for a while. It was up over 102 and then weakened slightly. And so the euro and some of the foreign currencies made a little bit of a recovery. And we see the Treasury yield surge. And we'll talk about the Fitch downgrade and caused all the Treasury yields to spike up over 4%. So TLT, etc. The Treasuries will see the price decline due to the surge in the Treasury yields, and we see we still got a pretty much inverted yield curve. And even though the yields did go down some on Friday, we did see that spike up on that Fitch downgrade. And we'll talk about some seasonality trade ideas that I'm looking at with Treasuries as well. Welcome, Alan Krantz. Thank you for joining us. Glad to see you as well. So let's look at each of the indices, how they finished up for the week. SPY. So again, we see that roll over. Now broke down below the lower trend line, still sitting above its moving average. So we've got some, potential downside. Looks like it broke out of that channel. So again, potential downside in the SPY. If we look at the weekly, again, we'll see that roll over this week. So entering August, probably profit taking, and we'll talk about that as well. And still significant room above its moving average. So, we've got some significant downside potential. Qs, the NASDAQ, very similar. We saw that exuberant run, topped out, rolled over a little bit, again, significantly above its moving average, potential for significant downward pressure. Dow, EIA, and held up a little bit better, but we see, topped out, rolled over. Again, we've still got some, downside potential. Got some support there, so maybe the Dow will hold up a little bit better. Didn't have quite the exuberant run as the SPY and NASDAQ. The Russell 2000, again, looks like it hit that top, got rejected, bounced down, get a little more potential closer to its moving average, maybe a little more resiliency than the exuberant runs we saw in the SPY and the NASDAQ. So look at the VIX. We had a little bit of a volatility pop on that Fitch downgrade. So you can see the VIX futures now popped up over 17. Looks like we may be headed into a slight uptrend in volatility. So again, with the rollover in the SPY, uptrend in the VIX volatility. So also see from a seasonality standpoint, if we go back to 22. We see seasonally, we tend to get a little bit of an uptrend in the volatility from, there's early August, there's August 12th of last year, August 19th of last year. So we saw an uptrend in volatility last year, and then a decline once we got into October, into the end of the year. So again, part of the seasonality we'll talk about and look at August versus September, October, etc. going forward. Okay, if we look at the groups and industries as well in FinViz, we'll see how the various sectors perform. So we saw the only one that was really significantly positive on Friday was consumer cyclical, probably just mostly due to Amazon. Worst performer was technology in general, probably a lot of pressure due to Apple. Real estate negative, consumer defensive. So even though it was a negative day, the risk off sectors performed the worst. Again, for the week, energy was slightly positive, probably mostly the surge in oil and utilities and technology. So interesting dichotomy. You've got a risk off and a risk on. Basic materials pretty negative, real estate pretty negative. So again, for the month, energy and basic materials were your outperformers, real estate, utilities, and technology were your worst performers. So we look at individual industries. See a mixture. We've got, some finance. Obviously, that's probably Amazon. We've got some materials. Silver and gold did have a slight recovery on Friday. Again, the weakening dollar. Same thing with energy. All your dollar-denominated commodities recovered a little bit on Friday due to the weakening dollar. See, we've got a long list of very small losers in the various sectors. So again, basic materials, solar. There's again that dichotomy we talked about: solar, broadcasting. I don't know who the bad actor in that sector was offhand. So you see some of the REITs were pretty negative for the week. Again, kind of a mixture, but very small gains. Oil. Again, biggest negatives: solar, broadcasting, some REITs. Gold and silver were generally negative for the week. Steel. Then for the month, again, oil, copper, uranium, steel, positive. Silver was positive for the month. And again, solar, negative. So a lot of, negative sentiment right now in solar and broadcasting. Airlines were negative for the month. And we are hearing some of the airlines cutting their forecast for Q3. So okay, we'll bring up the economic calendar in investing.com. I'll talk about some of the highlights from the economic calendar for the past week. Just a quick reminder, as this economic data comes out, I try to post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord is free to join. The free invite is in the description box below. So we encourage you to join our Discord. You can watch the Surf the Markets channel in our Discord. And again, as this economic data comes out, I'll try to post a screenshot from investing.com as well as the detailed data and a link there as quickly as I'm able, so you can keep up to date with near real-time economic data by joining our Discord and watching that channel there. We also got a great group of BeachBum traders who help us post news, trade ideas, etc. So again, we'd encourage you to join the community in our Discord as well. So let me grab a quick drink and I'll talk about some of the highlights from the economic data from last week. We'll look about what's coming up next week. Okay, not a whole lot from Monday. Tuesday, we had ISM and JOLTS job openings. So the ISM came in, pretty much in line. Construction spending a little bit down. Manufacturing employment a little weak. New orders a little strong. So mixed, but, generally we're seeing manufacturing slowing. PMI, so the inflation on the front end of the manufacturing supply chains a little less than expected. So again, we see inflation slowly coming down. We saw JOLTS job openings was less than expected. So again, job market tightening a little bit. There's fewer unfilled open jobs. So the Fed, would kind of likes that. Not much on Wednesday, Thursday. Then we got job cuts. So job cuts was negative. So there were fewer job cuts. We can see significantly fewer than the previous month. We got jobless claims continuing pretty much in line, a little bit higher than previous. Initial pretty much in line. I thought this was interesting. Non-farm productivity went up more than expected. So that means those in jobs are being more productive, which is positive, and unit labor cost was less than expected. So those are all bullish from a Fed standpoint. However, on Thursday, we also got that Fitch downgrade, and so that pretty much negated the economic data boost that we got from that, what they call Goldilocks type jobs numbers. So we also see on Friday, got the actual employment data, hourly earnings a little above expected, but the same as previous. Hourly earnings, again, same as previous. Work week's down a little bit. So, and I'm hearing that from people actually working, that they're getting fewer hours. Manufacturing payrolls are down. So again, more job cuts in the manufacturing than on the service area. Participation rate the same. Private payrolls was less than expected. So again, job market softening just a little bit. Unemployment rate, U6 was a little less than expected. And the overall unemployment was, again, a little less than expected. So again, they're saying, this was kind of a Goldilocks type of report. And generally, that's kind of what the Fed wants to see, except things are, very slow in changing. So I don't think that'll affect our outlook on the Fed interest rate hikes very much. So let's look at what's on the economic data. I'll quickly review the previous week, see if I missed anything. Chicago PMI a little less than expected. Construction spending we talked about. JOLTS we talked about. Mortgage rates went up. Again, 10-year treasuries went up. Yields went up. So mortgage rates went up. That's going to, impact new home sales. Although I did hear the home builders are subsidizing, paying down some of that interest rate yield. Again, ADP was, significantly higher than expected, but we didn't really see that reflected in the jobs data too much. Inventories, oil inventories, a bigger draw than expected. So again, and we'll talk about the SPR news as well that came out. So they're not replenishing supplies quickly. And again, we saw oil go up, to 83. Talked about jobs data. Factory orders were a little better than expected. Natural gas storage, again, down some, but still a build. And we've again seen natural gas pretty much range bound between 250 and 3 for quite some time. Not a whole lot of trending movement. Obviously, always some volatility there. Payroll data we talked about. Baker Hughes rig count, so the rig count dropped again. We've seen, rig count trending down, so again, less supply, and that's going to hold the oil price up, despite the SPR news that we'll again talk about. So next week, economic news, you see we've got Fed officials talking, so we'll get a mixture of, when do they think they're going to hike again, how rapidly, what's their view on inflation, etc. So a little bit of volatility, although I don't see people reacting as dramatically to that as in the past. Mortgage data, so not a whole lot until we get to Thursday, and then we've got core CPI. Again, this is one of the primary measures that the Fed looks at. It's expected to decline a little bit if it comes in hotter than expected. Again, we can expect a negative market reaction. We get jobless data, and then we get core PPI on Friday. So Thursday, Friday are the big economic data days. We get Michigan sentiment again. Wednesday, Thursday, Friday, or Thursday, Friday. Again, look like the heavy economic data days for keep an eye out on that data and see, the market reactions if it comes in better or worse than expected. We'll look at the earnings calendar here real quickly. Still have a lot of earnings. We've got most of the mega cap tech companies out of the way now. So again, you can see who's coming up each day. So we've got some, foreign technology, Sony, got KKR, got some biotechs, etc. Technology, communications. So again, we've still got quite a few reporting. Again, probably less significant in general, but make sure you have an idea of what sectors, if there's any stocks that you're looking at buying, when's their earnings, what sector are they in. Again, earnings matter, and you can see our video on, how to play earnings when earnings matter, and you saw from the reaction to both Amazon, who beat on their AWS growth rate, and Apple, who beat on their basic EPS, etc., but gave poor guidance going forward, and they have declining growth, how they got negatively impacted, a lot of profit taking, I'm sure, out of Apple after their significant run up. So and you can see who's reporting earnings. So still, we have quite a bit. So I'll let you go through this on your leisure. You can find the link here in our notes, as well as a link to investing.com on our homepage, and go to earnings next week, and you can see who all's reporting. So I hope that helps. So also, the next FOMC meeting isn't until September. In August, they have their Jackson Hole Symposium on the 24th through 26th. So we'll get some news coming out of that, more longer-term strategy, longer-term economic views. And I left a link to information I could find on the Jackson Hole Symposium for this year in our notes, so you can see that. Good morning, Easy Mike. Thank you for joining us from the beach. Glad to hear that. Hope you're enjoying the beach. So now we'll go ahead and we'll look at the market screen in Webull. Grab a quick drink. Just a quick reminder, if you're not already using Webull, they're still offering 12 free fractional shares of stock if you open and fund an account. They also offer a 5% interest rate on uninvested cash in a cash account. So again, you see we use Webull for our market analysis, due diligence, so the majority of our trading. We like Webull. This is the online browser version of Webull, and this is the market screen. So we like to do some of our market analysis here. So you can see the histogram from Friday, it was pretty split, small. Advancers, decliners, pretty balanced. Again, very balanced histogram, a lot of unchanged. Again, we see an inflow in the NYSE and a significant outflow out of tech, out of NASDAQ. We've seen that quite frequently lately on Fridays, particularly is this outflow out of the NASDAQ, inflow in NYSE. So again, you can find a near-term economic or earnings calendar here on the calendar tab. Go to calendar earnings and see who's reporting near term. So we see we've got just had Berkshire reported good earnings. And again, you can see who's reporting before market open, after market close, near term. So a good way to keep an eye on who's reporting earnings soon here in the markets tab in Webull. Look at the industries for the week. So aerospace, got some positivity. coal, oil, and natural gas. Uranium again was positive, so energy in general. We were having a discussion the other day about, why does solar and uranium kind of go up with oil? And in my humble opinion, I think part of that is the energy ETFs like the XLE. So when people pour money into XLE, I think it tends to also float up the other energies besides just oil, like uranium and solar. So just kind of a trend. Again, my opinion, none of this should be considered financial advice. We're not financial advisors. All of this is education and entertainment purposes only. But you all can tell me what you think of that theory as well. So we saw some construction positive. Healthcare kind of split, insurance. Look at the ETFs, look at the market ETFs. So short China right now, positive India, bear, so short S&P, get short China, short the Qs, so Dow short, S&P getting short, VIX, we've got a spike, short term up, UVXY is the one we tend to trade with long volatility, up volatility, another VXX, VIXY. I know some people also use those. So volatility up, short the Russell, short small cap, getting short China, up on Europe, getting short S&P, and short the NASDAQ. So again, trends in general are down. So for industries, mostly red, again from Friday, except for energy, basic materials, some positive. So nickel, uranium, lithium, timber, consumer cyclical, so mixed. Defensives was negative, which is kind of, again, interesting. We didn't see necessarily a wholesale flight to safety on late Friday. Real estate generally negative. Financial services kind of split. Carbon offsets positive, carbon. So we see that green energy, corn positive, and we'll see in the futures corn and wheat in a second. Soybeans up, corn up. It's got Asia positive, 25-year extended duration, so long end of the curve positive. Euro positive, yen positive, pound. So again, recovery in the foreign currencies. Now we'll go ahead and look at the futures. So again, we see that rollover in all the indices. So the futures, all rollover pointed down. We've got, some significant downside in all the major indices. So again, and we just saw, the ETFs are betting, down. So, play the downside. See, pretty well pronounced top in all of these. So again, the Russell, same thing. Nikkei's been, just kind of oscillating up and down recently. Hasn't made a new high. Got pretty good support there. We saw a dramatic drop in the Euro stocks. We've talked about last week. We had a focus on emerging markets, so you can go back and see our discussion from last week about how to trade the emerging markets, various ETFs we identified that are probably better for short-term day trading. So day trading, scalping the euro, We only have one long on the DAX, but if you could short that ETF, see the pop up in volatility up to 17, see the run up in oil, again, support at 80, making a new near term high in the 82, 83 area. And oil's, up right now. Again, natural gas, pretty range bound. 250 to, not quite 3. So it's just chopping up and down right now. Gold and silver were declining. Again, strengthening dollar. Saw a bounce. Got, pretty good support at 1950. Looks like it's trying to establish some support at 1975. Silver did break down below 24. It's trying to, regain that 24 level. Copper, topped out, declines, got pretty good support. Platinum and palladium kind of oscillating, again, got pretty good support here. We see corn, significant decline, near support area, might get a, bounce back like that. Wheat, same thing, and that was kind of interesting because of negative news out of Ukraine with Russia closing ports. They haven't renewed their deal yet, and yet we saw wheat significantly decline. Easy Mike posted a grains report in our Discord that you can see. I think it's in the Beach Party channel. So again, thank you, Easy Mike, for sharing that in our Discord. So again, we'd encourage you to join our Discord. You can get news. Other traders are posting news. Well, we also talked about the Fitch downgrade. Thank you to Solidago, Walter Lyons, for posting about the Fitch downgrade on Thursday. I guess it was late Wednesday. Since we're here, I'll just talk about that quickly. They downgraded both the U.S. long-term credit from the best rating of AAA to AA+. They also downgraded municipal bonds. So again, that impacts both the U.S. Treasuries as well as, again, municipal bonds. And we saw, again, Treasury yields pop up on that. We saw the dollar strengthen on that, which obviously negatively impacts all dollar-denominated commodities. See lumber, significant decline. So we see that big rollover in all the treasuries, partially on that Fitch downgrade. Again, we saw some volatility increase, dollar strengthen. Again, finally, peaked around a little over 102, and then it looks like it's dropping down below 102. So again, that may be a tailwind for your dollar-denominated commodities. So again, that impacted the foreign currencies, but they bounced back a little bit on Friday. Tomorrow, I'll probably talk about in more detail about some trade ideas, some strategies. Might talk about it later today in our strategy section about some seasonality observations that I've speculated on with the treasuries and some potential ways to play those. Tomorrow we'll also talk about some additional ETFs to play short-term swings in the various treasuries, be it day trading, scalping, or short-term swings. So again, we'll maybe talk about that later today and probably in more detail tomorrow. Welcome, Born to Be Free. Thank you for joining us. Glad to see you as well. We come back to ETFs. I just want to very quickly make sure, I'm going to talk about some of the treasuries. I want to make sure we talk about our strategies, our trade ideas for this week. Again, the news. Thank you again, Solidago, Walter Lyons, for posting about the Fitch downgrade on U.S. long-term credit. Again, caused a negative reaction. Positive for yields in the treasuries, negative on price, and again, negative for the market in general. We also talked about the U.S.'s government Biden administration is delaying refilling the SPR due to market conditions, essentially because the oil price is higher than what they would like. So again, I think it's like 6 million barrels they were had an order out to refill the strategic petroleum reserves, and they're going to delay that, I would assume, until oil prices come back down. So a little less demand, but you see oil prices didn't react negatively. Also, OPEC, Saudi is continuing their reduction into September. So again, supply reduction on that, and keeping oil elevated above 80. So let me grab a quick drink and let's talk about our strategies for making money trading in August. I'll bring up the Investopedia graph for the historical performance of the months, and we'll take a look at that and what the trends are going into the next coming months as well. We recently released a couple short videos on how the stock markets typically perform in August, and also what are typically the best performing sectors and industries in August. So you can view those short videos via the links in our notes, or also on our BeachBum Trading channel. And then if we go ahead and look at the chart, the monthly chart for in Investopedia.com for how the markets typically perform in the various months. And we talked about this in July as well, is that August is typically a slightly negative month. So we see July typically about a 1% positive. August, again, negative 0.1%, so just slightly negative. But you see that trend change from July to August as we went from, generally positive to now we're trending negative. So August typically negative 0.1. Goes more negative in September. September's typically negative 0.5, and then we get a rebound back into October, headed into the holiday season. And then, we get into the holidays, we start talking about, the Santa Claus rally, etc. So again, the trend, is downward historically. So again, and we saw that in the indices. It got into August, we probably saw some profit taken, the high flying mega cap techs, etc. Other ones that had run up, again, probably significant profit taking, and people probably knowledgeable about this seasonal trend. Also, we have the stock market, the summer doldrums. So people, probably selling, taking their profits, possibly leaving the market until, come back in October when things start to improve again. So again, we want to play that downward trend. Keep an eye out. We might get some, corrections, positive corrections. But again, the historical trend is downward. And so we want to protect our profits, trade accordingly. I wouldn't call this, bear market, but we've talked about strategies, how to play a downwardly trending market, a bear market, etc. for, quite some time, and you can review those previous videos, postings, etc. on how to trade a bear market or a downtrending market on our channel, etc. So again, our philosophy is you can make money trading in any kind of market, up, bullish, bearish, up, down, sideways, range bound, etc. There's always various ways to make money trading, and again, that's a message we try to convey. So I hope that helps. Also, we've released a number of videos about how to trade the stock market doldrums. So again, August, tends to be slow month at the end of summer. Although, we've got people going back to school, so we might see, some resurgence, people coming off vacation. And again, you can listen to all those videos about summer, how the stock markets perform in the summer, best sectors and industries, etc., and how to trade and make money trading in the summer stock market doldrums as well. So now let me go back to ETFs. If anyone has any questions, again, just let us know. Put them in the comments below, in our Discord, etc. If you have any questions, you want to look at any particular categories, indices, commodities, etc., relative to ETFs, if you can post that in the chat. I'll take a look at those. Just a quick reminder, if you'd like access to this Google Sheet where you can look up various ETFs to use to trade indices, commodities, topics, categories, etc., you can get access, 24/7 access to this by joining the all access or VIP levels or Patreon. And I typically use this, identify an extreme in the futures chart or in the trading for the day, and then look for ETFs to trade long or short using this ETF spreadsheet. Got a number of videos out on various ETFs, various categories. We also have been covering various emerging markets recently, the Nikkei, Brazil, Europe, DAX, etc. You have or will be seeing those soon posted on our YouTube channel. Some additions to our ETF spreadsheet I want to highlight, and we'll take a look at these. Easy Mike and Walter Lyons the other day, Solidago, were talking about TBT. I believe Easy Mike was playing TBT, which is an ultra short on the 20-year Treasury. So again, short-term trading, scalping, etc., of the 20-year Treasury. So we've added this TBT to our ETF spreadsheet. Thank you again, Easy Mike, for pointing that out to us. And again, I'll talk probably a couple minutes about some seasonality. I see some opportunity with trading treasuries. Also, we saw that drop in Apple on Friday, so I was wondering, they have some of these single stock ETFs where you can short individual stocks, whereas you can't short the shares in retirement accounts. So I asked, and Walter Lyons pointed out for the one for Apple is AAPD, the long version ETF. If you wanted to trade the ETF instead of just the shares, would be AAPU, or to watch for a top in Apple, you could use AAPU or just the shares. And then if you want to short Apple, like in a retirement account, you could use AAPD. Also added a link here in our notes to some of the other single stock ETFs that Direction has that has some other shorts. So like for Google, I don't know if they had NVIDIA, Tesla, etc. So if you're looking to short an individual stock in a retirement account, that's one place you can find that. And I've added that to the screener sheet in our ETF Google sheet for a quick reference. Yes, Easy Mike, AAPD is an ETF that you could short Apple. Unfortunately, I had that idea and identified that a little bit later than to be able to take advantage of that opportunity on Friday. So I added that to the research tab. So just so you can, in the research tab, you can find a number of ETFs that we've done research on in the past. I didn't add them to our main ETFs sheet, as they didn't necessarily provide the risk reward profile and I don't need to track them all the time. But if I want to see those, and then there's a link to both their perspective in the ETF database and their chart in FinViz, so you can see those on the research tab. So if you don't see it in the main ETF sheet, you can check the research tab, Again, just a reminder, I added this single stock, the link to the single stock page on direction at the bottom of the screeners tab. So a lot of information here in this Google Sheet that you can use to, again, find ETFs to play, whatever, category, indice, commodity, etc., that you might be interested in longing or shorting. So you can see we've got ups or downs. So I want to go to the treasuries just quickly, and then I'll come back. I want to talk about this trade idea. So again, Easy Mike identified TBT. So here's the risk reward profile on TBT. So it's an ultra short, so it's a leveraged ETF short on the 20-year treasury. There's some other shorts. So there's another TTT is another short on the 20-year treasury. So you can see who's down. TYO is a shorter term. TMB is kind of the inverse of TMF. So different ways you can play the different expiration dates of treasuries using this list of up or down on the treasury. So whatever fits your risk reward profile, and also the time period of treasuries that you want to trade. You can find an ETF here, find the one that you like that's got the risk reward profile that you're looking for. The idea that I wanted to look at with the TLT, the seasonality of the TLT, and I'll talk about this also some more tomorrow. There's another ETF called TLTW, which is a dividend-paying covered call strategy on essentially TLT, 20-year treasuries, and I want to look at the dividend payment potential of using that to park some money in and collect dividends. So again, we'll talk about that probably tomorrow. But the seasonality with TLT, I noticed, is if we go back to last year, we see starting in August, there was a significant decline in TLT. It kind of ran up to early August and then declined all the way into, late October. So the hypothesis, the speculation I'm thinking about is that we might see something similar this year. We saw that negative reaction, see something similar potentially occurring here. So I want to watch TLT and TLTW and look for a bottom. If it continues to downtrend like that, I think there might be some opportunity to find the bottom in TLT and again potentially park some cash and collect dividends either on TLT or TLTW. So again, let me know what you all think of that hypothesis, that seasonality. Again, another way to make money, trading August and going into the summer. Another strategy of how to make money trading in August is watching this seasonality trend in TLT. Now, again, short-term trading, you can use these ETFs, day trade, short-term trade, treasuries from different time periods. So again, I hope that all helps. So let me check the chat and see if there's any other categories anyone wants to look at. I'll scroll back up. So we've been talking about, cannabis, MJ, we're watching. You can see the various leveraged ETFs to play, biotech. We can quickly look at the screener for the technology components. So again, you can find our screener we've identified on the screeners tab, break down the technology components in the market. We're going to talk about several of these again tomorrow. See the FANGs broke down below the lower trend line, bounced off their support. It's one we're going to talk about tomorrow. Potential opportunity if we see a resurgence in the FANGs. Although, Friday we had Amazon up, Apple down, so it didn't really make a move. See biotech's broken down. Significant downside there. Still watching semiconductors. We see it's established kind of a new lower trend line. Made some money, trading that decline recently. We'll see if we get a resurgence if they, try to run NVIDIA again. See, generally the NASDAQ, we saw that rollover, but the TQQQ looks like it might be bouncing off of support. So again, day trading, short-term trading opportunities in all, several of these areas. Specifically, we're watching FANGs and semiconductors most closely. So I hope that helps. So again, I know we have a number of day traders and short-term traders, scalpers, etc. So I'll try to point out those opportunities, even though again that's not my forte. We're longer-term swing traders, so many of these I'm not nimble enough to really take advantage of. Same thing with the emerging markets. We saw Europe, the DAX. Again, we have these ETFs that you can use to trade long and short on Europe, etc. And again, short-term trade opportunities, not so much right now for a swing, just because their risk-reward profile and their distance from their support level, is pretty high. So again, we've talked about all the various emerging markets, India, Vietnam yesterday, etc. Natural gas, short-term trading, boil and cold, oil, gush and drip. Again, with the run up in oil, if you want to play that trend, you can play gush. There's also UCO, long, SCO short, drip short. Talked about potash, IPI, and MOS are individual stocks. Neither one look terribly attractive from a longer-term swing right now. Silver and gold. Here's some of the ones to play Tesla. So the Tesla short I have in this sheet already is TSLS. The long TSLL. So again, that's one of these direction single stock ETFs. Talked about TBT. Some for uranium. Easy Mike says Brazil lowered rates. Yeah, we talked about Brazil as well recently. So we've got those long and short. Long EWZ. So again, the trends, positive up, but short term, if you watch EWZ and then short BZQ. Okay. So again, if you're looking for something, ETF or various category, you can check our Google sheet. You can ask us, and if we don't have it already, if you'd like us to do research on a new one, then just let us know. We can do the research in the research tab. If it's something with the risk reward profile we're looking at, then we'll put it in the main sheet. And otherwise, we'll keep the research there. Our main ETF Google sheet, again, most of the pricing, the real-time pricing is provided by Google Functions, and then the support and resistance and bottom and tops are provided by our automated systems and updated at the end of each day. So we hope that all helps. And again, you can get access to this Google Sheet as well as tomorrow we'll talk about dividend payers and also our option strategies in our puts ROIC Google Sheet. Talk about opportunities. Again, we're in a downtrending market right now, so we might have some better opportunities. We've got some higher volatility, so again, we might have some better opportunities to sell some puts. Talk about some that we've sold, some we're looking at selling as another way to generate income, while we wait for the swing trading opportunities to present themselves. So again, if anybody has any last minute questions, please throw them up in the chat. I've got a couple minutes. Also, again, you can always put them in the comments to this video if you're watching it after the fact. You can also ask us in our Discord. You can tag us or BeachBum Trading in our Discord, all lowercase. No pounds, no numbers. Anyone with a pound or a number is an imposter. Again, we encourage you to all join our Discord, actively participate, help each other out. We've got a great community of fellow BeachBum traders. So again, join us there. Let's share trade ideas, share news, etc. in our Discord. Just a quick note, I'm hopefully, going to spend more time on our Discord and probably less time in some of the live chats, just from a time standpoint. So, if you have a question or want to make a comment, want me to see it, please put it in our Discord. And we appreciate everyone for your participation there and for all your support. Again, we hope you like this content. Please smash the like button. Please share this. We'd love to get a larger community of fellow BeachBum traders for everyone's mutual benefit. So also people that are just thinking about learning how to trade, etc. We'd love to get more of those people in our community, teach them that you can make money trading in any market and how to, build that life skill where you can make money for the rest of your life using your trading skills from virtually anywhere. As Easy Mike points out, he's on the beach and often on the beach. So me too. So tomorrow I'll talk a little bit about some of the ways I put orders in and go to the beach and make money. So also, please, if you have any suggestions about how we can improve these videos, any of our videos, our community, any of our support systems to add more value for all of you, our fellow BeachBum traders, please let us know. Again, the comments, Discord. You can also find links to all of our social media sites on our homepage, beachbumtrading.com, bum without the U. And again, multiple ways you can contact us. We also have a Facebook group, Reddit community. You can find the invite to our Discord, etc. So many ways you can get in touch with us and let us know what can we do to make this BeachBum trading community of maximal value for all of our fellow BeachBum traders. So tomorrow, we will cover part 2 of our weekly trading game plan for August 7th through August 11th. We'll select our top swing trading stocks to watch. We'll also talk about dividend payers, again, our option strategies, and we'll look at opportunities potentially for generating income with selling puts and buying them back cheaper, etc. So we hope you'll come back again tomorrow for part 2, 10 a.m. Eastern time. Same bat time, same bat channel for part 2. So, and if you, again, have any questions, any particular individual stocks you'd like us to look at tomorrow, please let us know, and maybe we can take an advanced look. So thank you to everyone that joined us in the chat and everyone that's watching after the fact, and have a great rest of your day. Thank you. Bye.